This is your Wall Street wake-up call. Global stocks falling as the Japanese yen soars. Let's bring in Josh Mahoney now, a strategist with IG Markets in London. So Josh, the yen reaching the highest level against the pound and the euro in 3 years, yet at the same time you also have global bond yields near record lows, government bond yields. So there seems to be fear in the air. Why?
Yeah, definitely. I mean, it is most certainly a sort of risk-off environment that we're seeing at the moment in terms of financial markets. I think this has a lot to do with what's happening in terms of the UK and the Brexit fear. Now, of course, dependent on where you're looking around the world, maybe they feel like it is or isn't a big deal, but certainly within the UK and within Europe, it's a very big deal. And there is significant repercussions. Now, of course, you know, we do have the FOMC this week as well, which again is another major event risk. But I don't think that any of these different events have the same kind of repercussions as a potential Brexit from the EU. So I personally think that we're going to see a lot more hesitancy, a lot more risk aversion, and a lot more of the same sort of yen strength coming into this, people getting into treasuries and things like that in the lead up to what is increasingly becoming less of a certain outcome that we're actually going to remain within the EU as time goes on.
And do you think this risk-off move sort of puts more pressure on the Fed to deliver a dovish statement on Wednesday?
Well, quite honestly, I mean, look at the number that we saw in terms of the payrolls figure. We're not necessarily going to see them actually move. As you say, it's all about the kind of rhetoric that they've said around this. Now, we've heard from them in the past saying that they want to do something in the summer. That leaves it down to the July meeting. July meeting doesn't actually have any press conference afterwards. So there's a number of people that are feeling a little bit sceptical about that, whether they're actually going to move in that. Then it would look towards September. So, you know, quite honestly, I don't think it was ever going to happen in terms of, you know, them actually raising rates ahead of a Brexit because of the massive implications of that. But, you know, are they going to be dovish? Well, they don't know what the repercussions of this or the outcome of this vote is going to be. So I don't think they're going to be massively dovish, but I do think that they'll leave the door open, if only slightly ajar.
So in this environment, I mean, what about stocks? What are you telling clients to do, especially as we see the S&P 500 flirt with 2100?
Yeah, certainly. I mean, you know, looking at US stocks, they're certainly holding up a lot better than we are over in the UK. I would say that, you know, people are generally going towards those sort of consumer staples, the sort of safer or supposed safer havens within the UK because of the fact that there is at any moment the potential for another poll to come out. If it starts looking like we're more likely to see a Brexit, then that really has led to widespread selling in terms of the pound and in terms of UK stocks. So if people are investing at this current time going into that EU decision, then generally people are going for the sort of safer things as opposed to the riskier assets, which certainly people will be ramping up buying that if we do remain. But for the time being, it doesn't really seem like the greatest investment.
All right, so it's time to get defensive. Josh Mahoney, a market analyst with IG in London. Josh, thank you.
Thank you.
I'm Scott Gamm, and you're watching The Street.